Hello everyone, good morning. Welcome to the Foreign Direct Investment. We are now moving to the chapter 4, the creation of financial assets. In March 30, 2020, the Investopedia.com had recorded the richest people in the world, and they are Jeff Bezos, the founder of Amazon, Bill Gates, the founder of Microsoft Corporation, Bernard Arnold family, the owner of LVMH, Warren Buffett, Larry Ellison, the chief technology officer and founder of Oracle. So do you think what are the secrets of their success and what makes them rich? The concentrations of our discussion for this morning is explain the roles of the investment banker and the financial intermediary, illustrate the flow of funds from savers to firms, and list several money market instruments that will create and grow the financial assets of multinational company. The world's richest family is the House of Saud, which has a worth value of $1.4 trillion. So what is the secret of this royal family, wherein they control the staggering amount of wealth in Saudi Arabia? Their secret is uh, they create an asset through the extraction of oil, which has also helped the country gain considerable political influence and sway on the international stage. And this is the secret to building wealth. Buy assets and avoid liabilities. The traditional meaning of asset is that anything that has cash value. Either it is cash asset or fixed asset. An asset is something that in the future can generate cash for you. Assets can make money easily and we call it liquidity. If you are going to check the first magazine about the youngest billionaire in the world, you could see the average age of these people. They play around 29 years old, 33, 31. So they are in the late 30s and early 30s. So it means that when you make your assets effective or you create your assets effectively or you have a lot of assets, it means that by the age of 40, you could be able to retire at your work or and you are just going to wait for the income from your money. What is financial assets? It is a liquid asset that gets in value from a contractual right or ownership claim. There are two forms of financial assets and physical assets. When we say financial assets, these are the cash that we have in the bank or we invest, okay, in a stocks or in a bond or we lend it to other people. And when we say physical asset, this pertains to building, property, machines, um, intellectual property, right? So those are the examples of physical assets. You can see in your screen the specific example of financial assets, stocks, pension fund, bonds, receivables, bank deposits. For our physical assets, we have livestock, precious metals, precious gems, collectibles, oils, and real estate. Before you acquire assets, you need to have the source of funds. There are four common sources of funds. We have retained earnings, debt capital, equity capital, and the bottom line. When we say retained earnings, this is the leftover income for the business after paying out dividends. So this is the income at the end of the year minus the dividends. So the dividend, those are the income of the or the share income of the stakeholders. And when we say debt capital, it means that you can acquire asset, okay, through loans. The equity capital is that this is the accumulated fund paid by the investors into your business in exchange for a stock or share in the company. And the bottom line is the income after all expenses deducted in revenue. So it is similar with retained earnings, but um, um, you don't deduct or subtract the dividend automatically or immediately. So you could talk about like can we just invest this money again to another business, okay? And we're not going to distribute that dividend. So that is the bottom line. But the return earnings, it is already the leftover after paying out the dividend. In How Teach It to Be Rich.com, they had given us 7 best income generating assets to invest in today. Number one is a certificates of deposit or time deposit. You're going to deposit your money in the bank, and for a certain period of time, they're going to give you an interest of the money that you had given to them because they're also going to use that money to invest in other business. For the bonds, it's like you are lending the money to a government or a corporation and it has an interest as well. For the real estate investment trusts, the government had given a policy that common people could be able to invest their money in a real estate company. Real estate's like selling and buying house and lots. Dividend yielding stocks is like you buy a share in a company, and at the end of the year, there will be a certain amount of the income will be given to you according to your share stocks. For the property rentals, that you have a building or a house, and then you add someone, okay, or a tenant to use that for a nominal fee. Okay, here in Korea, there are a lot of buildings, and that is one of the common businesses of people. Okay, and this is like a stable income because every month there is a regular income that is coming to your bank. And we also have that peer-to-peer lending wherein you're going to collect money and then let someone borrow that money for a particular interest. But of course, it should be in a common friends or whom you really know because it's really hard to lend money to other people. Okay? And this kind of lending business must be legal. It must be registered for your safety because if you're just going to lend money to other people without a contract, okay, it is not safe. Okay? They might run away and your money will be run away with them. And the last one is creating your own product. That is a common one, okay, of generating an asset like you're selling ebooks, selling online resources, podcasts, you create webinars, or you make products and then sell it online and then you just deliver it to the houses. These are the basic income generating assets to invest today. Here are some of the practical ways on how you can improve your financial assets. Number one is scrap a balance sheet. So you have to check your cash flow records, the income flows and the expenses flow so that you will be able to monitor the uh, the cash flow and you have to make sure that the income is bigger than the expenses. The second one is contribute to your 401,000. So that's just simply like save your money. According to Robert Kiyosaki, you have to save 20% of your income before taking out the expenses. Okay. And the third one, we have the pay off credit card debt. So immediately pay your bills, okay, to avoid accumulated interest. The fourth one is open a Roth IRA. So Roth RIA means like individual retirement account. So you have to prepare for your future. Okay, and this one is a tax free. So when you have a plan of retiring, you already have like this kind of savings. So nowadays they call it like insurance, okay, lifetime insurance, okay. And the fifth one is purchase a home. And then if you want, you could sell it also, like what Robert Kiyosaki had done on his first business. Okay, he just used um, his $500 left on his pocket and then borrow a certain amount in the bank, okay, to renovate a house and then sell it, and then he got a good deal with it. Then build 6 months emergency fund. So when you start a business, make sure that you have an emergency fund. Besides revolving fund for your day-to-day operation, you should have a savings, okay? 6 months savings. Okay, so if you expected that your business will have like $1,000 expenses monthly, so you have at least $6,000 in the bank in case that there will be some trouble with the business operations. Then look into other investment. Okay, so if there will be an opportunity, okay, that you can invest your money, and then go for it. Okay, don't just make your money stuck in the bank, because the bank will just only going to use your money to invest in other business wherein there will be the one to get benefits from that, or they will get the profit. So but if you use your money, okay, in like in other business, okay, it's a passive income. Okay, you let your money work for you. That is according to Robert Kiyosaki. That could be a good source of income also. And then invest in yourself, invest in education, training, physically, intellectually, and develop your human skills. Then save for your children's education, like education plan, okay, that is very popular. And then stay the course, meaning focus on your business, focus on your goal, and keep on upgrading the knowledge, upgrading the informations that you know, and the strategies we're in to make your business in a safe zone. Now, let us learn from the strategies of the well-known investors on how they were able to increase their financial assets. The first one is Robert Kiyosaki's principle. Okay, he had started buying property with no money. He just used credit cards and loans to renovate the house and then sell it. Then he was able to make a good deal with it. And then also his strategy is paying zero tax. Professor, is it illegal? Okay, no. It means that he had chosen a business that is being given a tax incentive by the government. He purchased an item that is tax free, and he used it in his own business, and he applied a lot of like government program, okay, for his business that is related with zero tax. And he had purchased tax on margin via unfunded brokerage accounts, and he also his strategy also is filing bankruptcy, because if you file bankruptcy, of course, there's no way that you could pay the people wherein you are indebted to. Okay, somehow it's kind of like frustrating or not good in a way, but that is their business strategy. Some of the article had mentioned that in terms of company reputation, filing a bankruptcy is really bad, but it will take a lot of benefits for the company, because if you file bankruptcy and if you're really facing serious debt problem, okay, it can be a powerful remedy to eliminate the different types of debt that the company is facing. Again, in addition, according to Robert Kiyosaki, you have to run your own business, okay? Raise capital gains like in share, in stocks and bonds. Focus in one course, concentrate on your business, invest in real estate, give more, receive more, change your money mindset, okay? Robert Kiyosaki had given a formula, like it's for windows on how you could increase your asset. Like the simple description is that you increase the income or the money that coming in, the cash in, and you minimize or avoid the cash out. That is his strategy. Okay, and work hard towards passive income. When we say passive income, you let your money work for you. Okay, so it's more on investment. Okay, either you lend it, of course, you have to make sure that it will not be risky or your money is still safe. Okay, you could go on networking strategy. Okay, later on I'm going to discuss that. Another very good investor who had a record in foreign direct investment is John Templeton. Okay, he strategized in points of maximum pessimism, meaning you acquire the asset in a low value and then you sell them, okay, in a high price. Okay, he invests his money during the post-war. Of course, everything is downgraded and the business is very low during the time because that is after the war. So he invested his money and then after that, of course, there is a recovery period. He was able to gain a lot of money from this situation. And he invested in Japan and Peru, which he reaped a fortune of his investment. And the fund average is 14.5% annually, okay, for over the 38 years of his investment. This is really a quite big percent of your return on investment. Next is we have the Dennis Cartman. Okay, he let a winning trade run and get out of losing trade quickly. So it's more on buying and selling and trading. And then Warren Buffett, okay, he checked his company profile every day, how much the cash in and how much is the cash out. And then of course, he mentioned that you have to trust the quality of the company and you provide a high quality product because a high quality company has a word price tag. Next one is Bill Gross. He believed that the company must say no to diversification of investment. Okay, if you could see the top 10 way of improving your financial asset, you have to stay on the track. You have to focus on you on the track. Okay, and also next Prince Al Walid bin Talal. Okay, you have to be a long-term investment or investor. Carl Icahn, okay, his principle is business. Even though you're a member of the family, when the price of the product is for selling, you have to pay the right amount of it. And Carlos Clean, opportunity in the midst of crisis. I think this is the common strategy of all investors. When the stock market go down, okay, and they buy, okay, those stocks, okay, so you could expect in this kind of pandemic situation there are a lot of companies who are filing bankruptcy. So what the investors are doing is they're going to check out this company we're about to close and then they're going to buy it and then they're going to develop and then they're going to manage it and then eventually they're going to sell it also in other company. According to Bill Gates, if he would be given a chance to start all over again, he would choose network marketing. That could be a good avenue for foreign direct investment, or it is also known to be the multi-level marketing or the pyramid selling. Okay, it is kind of controversial. Okay, because you're going to sell the products and services wherein the revenue of that company is derived from a non-salaried workforce, meaning the people is going to sell your product is not your employee but they are your co-investor. Okay, you had invited a lot of people to be a member and registered in your company and they're going to to sell your products. The more people that you're going to refer or invite to invest in the company is going to reward them. So there are different kinds or types of network marketing, but the risk is that it should be legitimate, it should be having a good system of networking, and they have to offer more value of your money, okay, in terms of the product, because some of the network marketer is what they're doing is they're asking you to invest $100,000, but the product is only like worth $50,000, okay, and then they're going to tell you the more you invite people, the more we're going to reward you, and then that could be the time that could be able to get or to get it will have the return on your investment, okay. And according to Warren Buffett, okay, um, energy deregulation will be the largest transfer of wealth in history. It's more unlike he's suggesting we should not depend on oil because some of the country who extracted oil, okay, take advantage about the price because some of the country will not be able to produce oil. That's why they're taking advantage of it. Okay, so like in our country, if we're going to make a factory, the electricity is really expensive. Unlike here in Korea, your electricity charges is very cheap. Okay, so that's why Warren Buffett suggested that if we're going to invest money, make sure that company is not going to consume a lot of electricity or energy to avoid the consumption of oil or buying of oil. Wherein um, really some of the country are taking advantage of selling it in a high price. So that could be one of the strategy from Warren Buffett. And the last part that I would like you to understand in increasing your assets is that from the excellent quotes of Warren Buffett. So in terms of earning, he mentioned that never depend on single income. Make investment to create a second source. Okay? And on spending, if you buy things you do not need, soon you will have to sell things you need. On savings, do not save what is left after spending, but spend what is left after saving. On taking risks, never test the depth of river with both feet. Okay, so you have to test the water. It's just like also the same like when you invest money, do not invest the 100% of your money. Okay, invest only like 70% or 60% at least. When there's something wrong, there's something wrong happen with the business, you still have a savings of 30 to 40% wherein you could use to recover to invest again in other business. Then on investment, do not pull all eggs in one basket, so related or similar to taking risks. And the last one is on expectation. Honesty is very expensive, Kip. Do not expect it from cheap people. Okay, so when you work, you have to trust the company, and when you are being trusted, you have to produce a right quality of your product or services. If you have a good quality and services, you could not sell it in a low price tag. You're going to sell a quality product with a high price tag. So the bottom line of our discussion is that we talk about how we could able to increase our assets. Where can we get funds? Where can we invest our money to increase our assets? And what are the sources of our assets so that we can use it as a capital to invest also in other businesses? And we'd learn from the different perspective or principle of a good investor. Okay, they are known investor on where and how we should take care and increase our asset, like Robert Kiyosaki, Warren Buffett, Icon, okay, the and the different authors of the book that will help us, okay, improve and increase our financial assets. So that's for today. And if you have any other question, just send me an email and I'll be happy to answer all of your queries. Thank you very much. This is your professor, Christine Joy Simpao. Have a nice day, everyone.